LaDuc, founder of TradeOutLoud, and I'm coming to you today from north of Boston. And I am very excited to be part of this women's trading conference. I know Anka from and David from the past year, where they've invited me to come in and do some presentations. Honored guest, and then especially with this theme of women in trading and finance. This conference in particular is a big passion of mine to support, elevate, and inspire women into trading and finance. So I'm very excited about that opportunity, and I would love to say that to your face, but my camera's not working. All right, so what I'm doing today is a little bit focused on risk management, and specifically how I do what I do. I am a macro to micro trader, analyst, and educator, and I am very much focused on live trading room action, whether it be commentating what's happening in the market, making news that moves the market, all the way to operationalizing what's happening in the macro landscape to better support actionable trade setups across chase, swing, and trend timeframes. So for those who trade intraday and they're looking for momentum moves, to those who are swing traders, and this is across every asset class. So I have both retail and institutional clients. This is something where they're looking for a little bit more of my market timing calls. That's what I'm known for. So I will share with you a little bit of how I serve members, which is basically that live trading room, brokerage triggered trade alerts, macro to micro analysis that I populate in a Slack client workspace as well. So clients have access to a lot of detailed trade setups, as well as trade ideas, as well as the macro case to support it, annotated charts, that whole 9 yards. I am running, in addition to the trading room and the analysis, the Slack channel, the brokerage trade alerts. I also have risk indicators that are Algo trading signals that are going to be launched on the Apple Store March 15th. So I'll give you a little preview of those as well, and a link if you want to check them out for free until they go live. They're going to be very affordable too, and they are across all indices and ETFs. So that'll be, I think, a sweet addition that are standalone, by the way. So I do personally, in discretionary trading, focus on a backdrop of macro. It's kind of like a funnel, if you will. I'm looking at all kinds of modalities, which is to say the macro environment. Oh, you still there, David? Hope so. I went.
Yeah.
Okay.
Yeah,
good.
I can hear you.
Okay, good. I am focused very much on the macro backdrop, and then I do intermarket analysis, which is a relational study to show weakness, strength and weakness, and that in particular sectors. So we got lots of industries, right? And money rotates often. About the reflation trade. You've heard about this. Right now we've got the reopening trade. You've heard about this. So I'm definitely looking for that trigger, and then positioning which particular stocks will benefit most. Commodities has been a big theme of mine. In fact, I was here in December and did a big commodity piece, in fact, for this whole theme back here. This was really cool. Back in December, actually, commodity inflation, reflation, reopening plays for you guys, David and Anka, at this summit. And it was all about trading oil to the long side, as well as the palladium, platinum, and uranium. And if you have looked at a chart of platinum, oil, uranium, you will see hot fire flames. So that's what I do in regards to the macro backdrop and intermarket analysis. But then I do every day just fundamental stuff, like rocket took off like a rocket yesterday, and I had already spied that and put it into a trade alert on Monday. It happened to trigger technically, and I will show you that. It also was a fabulous earnings beat. So folks are refinancing hand over fist and getting money out as well. from the mortgage market, and they had a fabulous beat. They also had very high short interest, and they had a great technical setup for higher. So I alerted clients to that Monday, reviewed it again Tuesday, and it did more than I expected, of course. I mean, that it went up 100% from when I had recommended it. That's not usual all in one week, I must admit, but it was a nice surprise. So I am looking for momentum stocks as well. And mostly it's really trying to help folks understand what's moving and why and how to trade it. So I'm known also for my calls on market volatility. So I definitely use volatility. Some people are afraid of volatility. They want to avoid it. I am go right for it. So I am personally very risk averse, but when it comes to volatility and trading, I want to be able to capture it as a momentum play. So whether it be like a rocket, for example, that had a ton of volatility come into that space, or it has to do with um, market volatility and what particular risk has entered the scene. I want to be able to anticipate to help clients tighten their stops or exit positions or add outright volatility. So that's my thing. I'm very much focused on momentum and volatility and across 3 time frames, chase, swing, and trend. And that's why they call me a generalist. I'm pretty deep generalist, but that's my thing. So I'm not just focused on futures. My focus is definitely on stocks, options, futures as um, a correlated way to trade any of these market timing calls. So some of my market timing calls are kind of impressive as it relates to finding tops. I'm very good at seeing distribution under the surface. So I find that tops are easy to call. And people who say that's a loser's game or a fool's game, it's absolutely wrong. 100%. I have made my biggest wins in calling tops. So I'm very good at shorting, but most of the time the market goes up. But my point is, stairs up, elevator down. I want to be on alert. Maybe that's the mom radar. I don't know what to tell you there, but I'm looking at the distributive tops that form and including what happened, in February and March, and then literally calling an end to it on March 20th. It was done. We had dropped 35%. And then on the 23rd, boom, we had the Fed intervention, and then we went straight up. So I'm watching to see the bond buying. I'm trying to anticipate when they'll intervene as a way to, again, manage risk. Risk management is a superpower, and timing volatility, including just recently in January, where VIX had a smashing one-day wonder in 62% increase in volatility. And not only did I time it, but so did my indicators. So this is just recent, the 225, but this was a 64% move in one day. And so I had alerted clients on January 20th that we were going to be getting some huge volatility. We ended up getting a 62 or 64% surge in one day. So and my volatility indicator alerted 2 days prior that on the 24th, I believe. Yeah, no, one day prior that we were going to get another surge of volatility. So I have built my algorithmic trading signals around volatility. My discretionary trading in my live trading room has been built around momentum and volatility. So that's really why I have that market timing call reputation, is because I really do see it. I really do post it. So I really also am better at tops and bottoms because the bottoms are event driven. Time frames, risk management, though, is still a massive, superpower. Risk management to me is all about combining. For those who are technical analysts or they see patterns, I'm definitely pattern recognition gal, and I want to be able to create a prediction of where price is moving on an underlying based on when to enter and where I see the stop loss and where I see the profit target. So technical analysis for any instrument is still absolutely essential. So timing and risk reward are keys to putting on a trade, but only exit pays, right? It's easy to enter a trade, but exiting is where you actually make money. It's the win or loss. So to optimize results on any time frame, I believe anyway that traders and investors can benefit from not fearing volatility, but following money rotation, which is what I do. I watch very closely what's going on with money flow, and I can do that from an institutional level. It's gamma and quant and CTA positioning, hedge fund positioning. I can also do that from unusual option activity. And I'm not talking about, a bet that's $27,000 or $60,000, but it's the cumulative, accumulated calls and puts in a particular momentum play that can drive what's called a single stock gamma option, meme, like the GameStop, like, this week, Groupon and Rocket. The point is, you can sit in front of a computer and not know why something is moving until you look at the option flow and you can say, oh, I can see why it's getting so much popularity that it is just volume is swamping the supply of sellers. So it's very much another way of telling on a short duration what's happening in a particular instrument. So I like to follow money rotation also in sector themes. Recently we had the Pfizer vaccine announcement. That was November 9th after the election, and we had a gap up across all the reflation trades. The impetus there was that our economy was going to get better. So with a better economy, you have higher yields. It can absorb that. We can have higher growth. You also have reopening trades that start to percolate, like the airlines and cruise lines and casinos. Oh my! But the bigger theme has been commodities. So as yields and commodities, they kind of pull each other up, if you will, and the commodity theme of we were way oversold, multi-decade lows. And that's why I had this presentation back in December that oil was not done. We had much more to go. And we've actually climbed 100 points off the April bottom in crude. That's West Texas intermediary. And energy plays, which were also oversold, like Exxon and the like, were also extremely high probability rotation plays. So I'm looking at risk management saying, okay, I can see that technically, price is supported, option flow supports it, institutions are coming into it. We're in a hot segment that is supported by macro. It's basically rotation, and it happens, and then it sometimes pauses, pulls back. As long as it's a shallow pullback, it's good to go. Other times it happens like a 3D play. For example, I talked about this in my YouTube videos, which I have a YouTube channel, and I do provide, of course, the macro stuff. I have a regular theme on Tuesdays and Thursdays where I talk macro. But on other levels of short duration videos, they are my trading insights, like I had a few months ago, 3D players, so the DDD. And then I actually said, I think it's done, meaning this parabola had to reverse. So it's been a short. All three of these. So you can see that this is a particular segment in this, oversold, left for dead space that got a lot of momentum, and then it kept going up, 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 and then it reached a peak. Happened to be, in this particular case, a fib level, and then it rolled over hard. So I'm looking for themes, and then how long to play it. That's technical. And then when to short it. Sometimes it's technical. Other times it might be structurally. So back here, after this parabola in Mara, for example, which is a Bitcoin proxy, literally in my Slack room on this date, shares were no longer available. And I wrote, get out of the pool. Like this, if you are long, be extremely careful, because this is a tell to me that we have, here is what I wrote in Slack, literally. Bitcoin plays, I was in such an excitement, I didn't even, spell it correctly. Mara and Riot, no borrow, trapped longs equal liquidation risk. And that was February 18th. Up until that point, it was long, MicroStrategy. And I was even looking for new Bitcoin plays for that speculation chase, right? That turned into a swing, that turned into a trend. Bitcoin and the proxies were running until this date on February 18th. And then I went warning, and that literally was a great top. So on this day, and we have obviously chopped around, and you have not taken out the $48 level, but the point is it comes into distribution structurally sometimes, and there you go. It doesn't mean it's done forever, but the point is it becomes now a risk warning. And that's what I told my clients. Also an MSTR, which I have also done free videos on this. From 140, it doubled, and then it doubled again, and then it doubled again. And oh my God, it went to almost 1400. So when that particular day, comes where it gives you a really strong technical assessment short, I'm going to warn clients, be careful. I think it's heading back, back down to 806, which is where it broke out. So there's still going to be always a flavor of technical analysis, even though I use a backdrop of macro intermarket, sector rotation and such. That to me is really powerful. So risk management is powerful and a superpower if you combine the technical with the technical analysis, the entries and the exits, which is my thing, to do live and when in trade setups and alert folks in Slack and do that whole custom thing in my trading room. And then I post my intermarket analysis and macro stuff. Macro was getting more and more supportive of Bitcoin, or more supportive of a higher yield regime. And that translates into reflation trades. That translates into commodities. So I'm using that as a backdrop, and then I'm populating it in my Slack channels. And that's really a powerful way to communicate my themes from intermarket. So, this is the shorts on the 3Ds, but my intermarket tells can get a little bit wonky. But the point of the matter is they are also extremely telling when we have, for example, that's all rate stuff, when we have a rotation out of, for example, bonds. And so I post this type of intermarket analysis. This is yield curve stuff, and some won't care, right? Most don't really realize that their tech holdings are completely tied to duration. Duration has to do with this low interest rate regime that we've had until the massive amount of stimulus that's come into the market, and then the Biden bid into the election win, and then the blue wave, and then I should say before the blue wave, the Pfizer vaccine. Basically, this is really a strong theme that I will go in and do intermarket analysis. This is my growth to value rotation theme. What does that mean? It means tech is going to underperform value. What's value? Commodities, reflation, that kind of stuff. Sometimes it's short interest, left for dead plays. So I then size this up. That was September 4th. So I'm able to say, okay, I really think we're going to have a regime change. Growth is done right now, outperforming. We're going to go into value. And that was absolutely spot on. So I use the intermarket, I use the technical analysis, and then I put it together for clients, and I come up with option tactics. And basically it depends on time frame. Some are going to position, for example, today I did a live trading room pitch for the 3 o'clock time frame here in this conference, where I was talking about Apple. This is kind of busy, but what I was telling a client, because a new client asked me, so what about Apple? How do you trade this short? Because my theme was right here that we were going to soften into 135.50. We overshot it, and we had this beautiful rounding pattern, which to me is called an H pattern. Again, patterns in technical analysis, they're all very constructive to use with everything else, macro, intermarket, cent, quant, and such. So I said, well, it depends on your time frame. Big picture, this was the tell. Algo was done going up for now, and we were going to reverse. And probably we're going to reverse lower to like 106, but it could be a few months. Like this could just end up being in a channel for a while. You can't just say, all right, Samantha really has a good point. This looks really weak. I'm going to buy next week's 122 or whatever the heck this is, 122.40. My price target was 120.50. In any case, it never would have worked because that next week it was inside, next week it was inside, then it broke, and it's still weak. So option tactics are based on individuals' experience levels. Some would sell calls, right, and protect their longs if they were a position trader. Some are going to put spreads on. Some are going to buy directional. But time frame definitely matters with option um, uh, tactics, and I discuss those. So it depends. If we have a week of chop like we do right now, time frames are going to tighten up. If we have a directional play from a weekly, which by the way, this is a weekly time frame, I associate more with swings and trends. This is a day time frame, which obviously is, very different as it relates to just the intraday stuff. So today on an hourly chart, we failed, right? The cues were very soft. Apple and such were rolling over, and they came right down into my 308.60. So literally, this is not news for my clients because I go in and I populate what are my price targets. I just wrote that by accident, by the way. Okay, so in my chase themes, I have had Apple and QQQ and basically the main big tech plays as shorts. And so I populate this in with the starting points. So in other words, here, let me kind of show you what I mean. This is, Baidu went negative today. So today this was actually up 3%, but I have it as a short because I really don't think it's going to last in green. The Qs didn't add until 226, so kind of late to the party there. But the point is, as soon as it broke down, I didn't like this look, thought we would have this kind of bounce into resistance, and boom, finally we did. And then another bounce into resistance, and now boom, 208.60. So I will put my price targets in Slack as well as brokerage triggered trade alerts when those go live again on the 15th, where all of this is presented. So it literally has, let me just show you. Apple from 145.50 to 135.50. We're now at 131. It needs to break 129 to head down to 124. Okay, we hit the 124. Now what? Here's my list of shorts. I really think we're going to start to roll over. 124 price target was hit, on way to 120.50 next. So this is what I'm doing, level by level by level, across all the short themes that I happen to pick up for clients. So this is the watch list that I'm tracking, obviously, and it's done really well. And these are just shorts. This is separate from the stuff that's done really well on the long side. Today, MIK, which is Michael's, decided, I guess, that they're going private with Apollo. This I had just added on Monday, and literally it was a client request. And also I got a trigger because it has a lot of short interest as well. Left for dead retailer, added this, and boom. But there are longs in here that are doing extremely well. This just happens to be my short list, which also happens to be doing extremely well. So hot February and March, because obviously we've rolled into March, is basically that list of plays that I still like, and I basically rolled them over. So this strong, right? This actually triggered longer. And I said, as soon as it can get and stay above 24, it's headed higher. And it just tagged price target, which is 30. So that's what I mean by having a list of different time frames, because that helps create some option strategies for directional calls, call spreads. Some folks are a little bit more sophisticated. They can sell premium for that decay, if you will. But everyone has a different time frame, of how they like to play. Some just like the weeklies, and some really want the safety of leaps. So that's a personal preference. One thing I want to talk about were these risk indicators, because they have just been on really great, fire here, if I can show you. For example, anyone familiar with ARC? All right, so ARC is the Kathy Wood, fabulous, innovative technology plays in her ETFs. I happen to have a risk indicator that will now intraday, but also daily, will track every ETF. It's so flippin' cool. And I will tell you, I will show you. But even on this indicator, you can see it first. Let me just overlay this here. Let me see if I can do this. Okay, so time frames. When I actually took a picture of this at 1 o'clock, that was up 3%. It's now red. So all of these are winners, and that's not usual. But on the, no, that's growth plays. Here it is. All right, so risk indicator. These are my algo trading alerts. And let me show you what that looks like. And I'm also going to give you a nice opportunity to go in there and try them out yourself. This is hosted on VigTech.io platform. Okay, this is a fabulous, fabulous marketplace. It is relatively new. My algos are also new. They will be sold on Apple Store for not much money, and they're standalone. So you use them all by themselves. And here's kind of how it works. So I have 3 time frames, risk range alert, which is triggering every 30 minutes. Then I have go with the flow, which is going to trigger twice a day, noon and 4. So this is very much for those who are like swing traders and you just don't want to be bounced about, because risk range alert is obviously tighter time frame. Okay. And then portfolio hedger, which is about volatility. Now, right now, there isn't a volatility surge coming in as far as an alert. And yet, oops, sorry, didn't mean to do that. Last week there was. It actually triggered on the 24th, and then we had a big volatility surge. SPY, we haven't had one yet. So this is on a little bit different level of alerting for volatility. But for risk range, you can see in the cues, we have definitely gone bearish along with some other plays. And this is where I was talking about with the ARC plays. For example, if I go here, you can see ARC, 4 of them, right? And you can see that they triggered March 2nd at 2 o'clock. So they actually had gone bullish on the 26th, and then they went bearish again at 2 o'clock. Actually, that's 2:30 for that one. You can get the point. That's 3 o'clock. That's 2 o'clock. So ARKQ. And then, of course, and the point is now you can look on your, you can look here and you can say, guess what? All right, let's size that up. Well, the very first one that went into bearish, that's interesting, was February 12th. I got the right one. And then it went bullish very briefly on the 19th, right here. Reversed and went bearish again. I'm looking at the timestamps. We had a very brief pause on the 26th right here. And then the next bearish was 2 o'clock. Yep, 2 o'clock, wherever that is. 2 o'clock here. And from here to here, so you can see how you can use these on an intraday time frame to stay on the right side of the trend. Does that make sense? So you literally pop it out. You just look at this little history and it will show you every time it changed from bullish to neutral, neutral to bearish, bearish, and back, right? So that helps you directionally stay with the trend. So I'm going to let you know that this is the link if you would like to access those alerts for free. And it is literally 3 time frames and you can play around with it. I think that's one way that I help clients manage risk. And now those who are not in my trading room can do it for themselves. All right, so the risk range alerts are one way to manage this incredible market movement, if you will. And when I talk about the time frames, this is another way of managing risk, because everyone really has to figure out how they want to sleep at night. And some people go to cash at the end of the day. They are basically trading intraday. Maybe they trade for a few days. And in my particular case, I use options 1 to 3 weeks out, maximum risk. So in other words, if I put 1% of available equity in it, maybe I have a 50% stop. Maybe I'm okay with it losing entirely, because it is a speculative risk. It can also grow exponentially if I'm right? So a Rocket, for example, or a GameStop, those are very big moves, because it is a standard deviation move. And wow, you could never have that on just a stock alone. Options are the juice, or the gas, if you will, for the car. So for most, though, I would say of my trading is in the swing time frame. They typically last 1 to 3 weeks, and I employ options 1 to 3 months out. So that Apple short, for example, whether it be a directional put or a put spread, that is for me. I'm going to kind of set it and forget it. I've got my level 144.50. I'm wrong if it goes above that. Otherwise, I'm just going to let it sit there, and it's going to build in value if my thesis is still right. In other words, if I entered the trade because I had a good thesis, whether it be macro, technical, intermarket, what have you, I want to stay with it until I can get to that price target. And sometimes just the convenience of having multiple months of an option is very good to sleep at night. It doesn't have to happen in the next, 4 days before Friday's options expiration. And for trends, oh my, those need to be rolled. So I want to show you some trend trades, because that was, for example, last year, I had in June done up a newsletter for clients with my end of year bets. Okay, so let me see if I can find that. I might be taking too much time to do that, so I probably won't do that. Anyway, the point was, I had an article at length, which was going to be my Q3 bets, okay? And so I published that for clients June 2nd. No kidding, June 2nd. And this is the result. You can't see it very well, so I'm going to put it up on a different platform here. Probably still can't see that so crystal clear. But I don't know if you'll notice, but they did extremely well. So what I had was a stop. So I had the price entry, a stop, and a price target. And depending on where, people have to trade their own style. And this is only on a stock basis, okay? And you can see some didn't do so well, like Rite Aid didn't do so well. REPL, SDGR at the time didn't do so well. I went right back in when it hit $62, recommended it, and it's now 114. So I'm going to the same pond to go fishing, if you will. So I have already done my assessment of all of these stocks that I really, really like for different reasons. GameStop was my 4 to 40 stock. So I believed very strongly that GameStop was going to go from $4.34 to $40. Now, when this was printed, this was just my third quarter. So we're talking, last year, and it was right before the October quarter began. This is how that had done. So it had already run from $4 to 11, but I was convinced it was going to 40. And by the way, fast forward to January, when it went to 40, I said, no, it's going to 50. When it went to 50, I said, it's going to 60. And those videos are on my YouTube channel, just so you know. And you can see my GameStop, even when, right, this one, GameStop has no stops. When it was $240, I said, careful. It was a Monday or Tuesday night, I can't remember. And I said to clients, something's going to break with this one. This is a freak of nature, and volatility is getting bid up. And I believe we're going to have a strong bounce in volatility. GameStop likely, hurting those shorts that, are having a really tough time covering, could be a no bid market, meaning there won't be options traded. There won't even be stock traded. And wouldn't you know it, the next day, they stopped trading options in many of the brokerage firms. Then the next day after that, they stopped allowing the stock to be traded in many options firms. All kinds of outrage. But the point was, it did tag like 480. So it doubled from my 240. I'm already out at 240 from $4. Ridiculous. Clients wrote me, one in particular, first time he became a millionaire. The point is, options can be very powerful. You need to give it a little bit more time. I was an April $12 call that I had recommended back in October of last year. So I'm talking, that was a trend trade idea. I didn't know how long it would take to get to 40. I actually thought it would get there by the new year, and then it was at the beginning of the year when it went from 40 to 240 and 240 to 480. So the point is, I definitely do offer some trading insights that are worth, I think, following up on from my YouTube channel. So I recommend or invite you to subscribe. But getting back into that kind of the swings, then a lot of these names I wouldn't even trade anymore. I've moved on. I've totally moved on. I use time frames of trend to look for leaders. This is an assessment that I do out of the whole universe of stocks, and then I share it with clients. And a lot of these, as you can tell, are infrastructure, communication, basically value plays, right? A few of them are strong semiconductors. I share those types of durable themes with clients. And if you look at this list on a weekly time frame, they've done nothing wrong but go up. So they're very durable plays, and they're actually a scan that I do. This is different from a theme. For example, I'm not even talking reflation theme and commodities, which have been my bread and butter, but this is a group that I call explosive growth. And it's a list of 35 companies, and only five were red, and 2 of them on the day I took this. So this was a review of like MSTR and APPS and, blah, blah, blah. They do really well when there's a theme. I'm good at that. I'm good at finding themes and then going in and cherry picking the best of those themes. And then, that to me is one way of also kind of managing risk, is to just go with the stuff that's working, keep with it, trade around it. That has been very productive. So a chase time frame is this kind of stuff, right? I first put my, 217, 212 was Apple. Yes. So when that was 135, I had actually suggested 144.50, as I showed you on that chart, but it made it into this particular watch list for clients that I share with them every day, on that fateful kind of 212, if you will. So the point is, these are chases. I consider them to be something that is going to take a short duration. They're going to happen kind of quickly, and that works. These were ideas that were across every sector. They were just my favorites, right? And that took a whole quarter, but they did really well because we were in an uptrend. I mean, it was a bullish market. And this is definitely a theme of explosive growth versus commodities versus reflation. So that's how I kind of approach the chase, swing, and trend time frame to manage positions in and around, and also general trading plan for options. Like I said, 2 hours, 2 days, 2 weeks, 2 months. I have a different position size, a different, option tactic. That's also risk management. I think risk management is a superpower when you place a trade, not 10% of available equity into a weekly, but 2 to 3%, of available equity into a trend trade and let it grow. Maybe only 1% or 1.5% into a weekly, whether you watch it closely or you're willing to let it expire worthless. So for me, capital management is how to position an option, also based on delta. If it's in the money or deeply in the money, it's not going to move as much, obviously, if I'm right, but it's also not going to lose as much if I'm wrong. So for me, that is a safer bet, is to trade at the money, usually, or deep in the money. If it's a trend play, then it becomes almost like a substitute for stock, but it has still lots of the juice. So this is how I do risk management on a capital deployment, if you will. I look at a trade as being small but frequent. I trade both directions, long and short. I always have a long list and I always have a short list, and then I pick the best ones. I am always trying to anticipate volatility, for sure. which is entering from, that particular stock or the sector or the market. I like to, for sure, do outliers. In other words, like the 3D stocks that just went up, 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 and then they broke. Those are fabulous. But honestly, this is a lot of that's a personal decision, right? Some only like to play those that are breaking out. Some are very much into what I call bottom fishing plays, right? Like a GameStop was an absolute bottom fishing play. The 3Ds were a bottom fishing play because they hadn't moved for such a long time. All right, so that is why they had such short interest attached, and then why the fire catches when they actually have to cover and it propels it into blue sky. So for me, it is very important that I lawyer a trade. So I look at both sides, bull and bear. What could go wrong? I don't have I'm not married, I'm dating, these positions. Apple's a short, why? And then I want to just keep testing it. What's the bull thesis? Right? There's all kinds of bull reasons to be long Apple big picture. But if I have a strong thesis, I want to stick with it. And this is how I basically enter and then manage and exit a trade based on the technical, the macro, the intermarket, and all that. So that's really my focus is, picking up on this stuff, operationalizing it for clients, and letting them know when risk is coming in, because risk to me, mother of three, I'm, using my intuition, my mom radar to identify risk when it comes in and how to mitigate that, which would then be lighten up. Don't trade so much. If you're not sure, no trend, no trade. So these are some of the ways that I approach markets. This is what clients tell me that they, I help them understand not only what is moving, but why, and then how to safely enter and exit a trade. So that's how I hope, this adds value in your own assessment, right? Of doing your market analysis. Do you have confidence in it? How long are you planning to be in it? What are your reasons for being in it? What if it changes? Do you have levels to get out? I'm actually pretty much a stickler technically when it comes to this time frame. So this is a week, a day, and an hour. So think of it as chase, swing, and trend. And for me, the 10-week, which is this faded gray underneath the Keltner channel, is critical to stay in a trend. So ARC, for example, just as an example, because I happen to have it open on the screen, but I could do it with anything. I saw this gap down, right? This was February collapse, and I wasn't even looking at ARC then, if truth be told, because I was so absorbed with the market structure underneath, and literally called it February 18th into March 20th. And it happened on the February 24th into March 23rd. So I was a few days early and one at getting into the short and 1 day early getting out of the short. So what I look for then is when we have a reversal, in this particular case, check out this gorgeous 200 week, right? Pierced it, stayed above, green. Okay, now we got a whole bunch of moving averages that it sliced right through, needs to get above. And I'm not even talking about, fiscal stimulus or monetary, nothing. I'm just talking about this chart technically, okay? When it got above, and look at this, it stays above the 10. Even when it gets a little extended, it comes back, it's a shallow pullback above the 10. It moves higher again. It's kind of, it's totally bullish. We're in a bullish market. It tags the top of the Bollinger Band and it comes back to the 10. Then it looks a little suspect. You know what happened here? September 4th, 2 weeks, only 2 weeks, and the NASDAQ dropped 14%. It was sweet because I also called that. And I also said, don't use volatility as a hedge. It will be negative. And why? Because I saw in the NASDAQ, as calls were being bid up like Apple and the like, volatility was being bid up also. So they were hedging with buying calls. So when it actually did come time for September 4th, drop, pull back, reversion to the mean, VIX was not a hedge. I've talked about that before. Anyway, but here's the 10-week breakout. There's the Bollinger Band. Ooh, it pierced a little bit more here. We got a little nervous before the election, right? Then what happened? Went right back up above the 10-week. This 10-week for me is gold. It's more valuable than gold because I can tell the personality of a stock with how it trades around the 10-week. This was the the Pfizer vaccine, and you can see it did extremely well, staying above the 10. Now it's getting a little wonky. Wonky means extended. It's gapping. Well, it has a lot of Tesla and it has a lot of Bitcoin. And what was moving up like hot fire flames, like a commodity, well, Bitcoin and Tesla, the EV craze. So we had EV sector, we had pot stocks, we had SPACs, we had Bitcoin. It was crazy. Everything was getting chased and it was exciting to trade. And I was very excited that I had the 10-week to keep me in the trade and to recommend to clients to stay in the trade. Now we pull back, look what it does. There's that 10-week again. Gorgeous, right? First of the year, little nervousness because of the cap, because of inauguration and all that. Then this is bullish and it's getting a little tighter now. Now it's getting a little bit funkier. Okay, we broke the 10-week. So when my eyes look at this, I'm thinking we have risk, right? We have a lot of risk. This is Biden's in, the COVID relief bill is totally assumed. But what else do we have happening? We got rates going higher, which is something I have been on solidly since September. So as rates get to a certain point, then it becomes less beneficial, or it's a diminishing return to be long tech. So now the valuations, the multiples can contract. It introduces risk. So I understand that macro backdrop, and then I add it to a technical look, and I'm like, oh, look at that absolutely gorgeous bearish engulfing on ARC. Guess where else? Absolutely bearish engulfing on the Qs. Guess where else? Microsoft, ooh, that's a gap down. That's bearish. Amazon, that's a gap down right here. You can't see it. That's bearish. And we already know about Apple. That was also a cloud cover. You know, for technical analysts who are into candlesticks, they'll know what I mean. But the point is, this became risk, and it went right straight through the 10-week, bounced into the 10-week, and here we are on a totally different moving average where, by the way, we can bounce. That's not the issue. The issue is that the trend is now broken. Does that make sense? So I'm very much looking at trend swing, chase time frame. Also, clients have their own stocks that they're really excited about and their own thesis, right? So I have to engage, not have to, I like to. I engage and set up their or given my opinions on their trade ideas, right? Whatever it is that they're looking at, they're excited about something, you know, or they want to set it up for long or short. So I will do that analysis live. And then of course I have my Slack room, which is really cool because I can post my macro to micro, my intermarket analysis, my market moving news, my member chat engagement. So I'm available. My risk on, risk off indicators, my, you know, all that stuff, chase, swing, and trend timeframes. It is very much a labor of love because I'm working way too hard. But that is why, honestly, I wanted to come up with the risk indicators to be able to provide a way for clients to kind of independently, when I'm not in the trading room, or because they're looking at something that they are very excited about, they can just go in and do it themselves. Okay, so sometimes the data underneath is a little tough. Like we have firmly been in a bearish mode in the Qs since February 24th. You can trade this. Like this is a nice smoothing indicator to let you know IYT is still bullish. My intermarket analysis, by the way, is still bullish. Transportation. It's the very first thing to trigger was actually XBI, February 22nd. February 22nd. Now go to a chart. XBI. What does it say? February 22nd. What day was that? February. Do I have a 22nd? right here. So that's the most recent one. So in other words, that data, it goes back. These are time stamped, but they're also, it's back testing. So anyway, you can go and scroll down further and you will see that it actually triggered here. It went bullish for 1 day. And the one that I'm just showing you right now is the 22nd, right here, 22nd. So look how those are also going to help manage your risk. Okay. So yes, it can be bullish on one time frame, 100%. So for example, the SPY, hello. Okay, so if you can see, and it's kind of a little tricky here, SPY hasn't broken the trend yet. Qs have. ARC has. Does that make sense? So if you look at my risk indicator, you're going to see that SPY still says bullish on the go with the flow, which is that trend indicator. It is not the intraday indicator. Intraday might have a little bit different reading. So I was asked if I use, yes, I'm a directional trader. I really rely on my analysis and my volatility reads. So I use directional puts and calls, stock if it's not liquid. I do definitely use debit spreads. I am not a credit spread trader. It's not my thing. I do, however, that's not true. I loved financed call spreads. So, and it's the only time I use financed call spreads. So if something's really oversold, like a Gilead, and I have no interest in it right now, but I did a presentation here, and it was literally Gilead. I did a finance call spread, and it produced 2,500%. No, 25,000%. It was at the time the biggest option move in an option tactic I had ever used, and it's where I buy a call, sell a call, and then finance it by selling puts. But most clients don't do that, honestly, and it requires a lot of margin. So I don't do those at all in my service anymore. I just do them for myself. So what I wanted to say was, this is a recap. I did a trading video, a live trading room video earlier in my previous presentation. This is how I approach, oops, sorry, from my risk indicators, right? And I'm going to share that link with you if you want to sign up and have a look for yourself. I definitely would love to invite you to subscribe to my YouTube channel, which is relatively new, by the way. And I have a few things going on here for themes. I've got 5 playlists. Macro to Micro Power Hour is Tuesday and Thursday. SPAC Attack, fabulous presentation of expert view on the SPAC space. I have a running Tuesday gig with Jonathan Gibbons of VigTech, just a incredibly insightful, macro to micro analyst and trader like me, but from a completely different approach. He uses market structure, very much the option data underneath the surface that he can devise where they're buying and selling. I use a different approach, but we arrive so often at the same place. It's scary. I have an oil trader coming up next Thursday. He's been on the show before. He is absolutely brilliant. He only trades oil. Jared Dillian, I don't know if you know him. He's extremely well-known macro wonk. I have Juliette DeClercq coming up tomorrow. She is a macro maven and charges $10,000 a month for her research to institutions. So I'm no slouch when it comes to macro, but I'm not that. So she only serves institutions with her macro. I love the retail crowd. I like the momentum. Restrictions not my jam. I created algorithms. I have a fintech product for my trade alerts. I like to really not stay in one particular lane, but I love that these women are joining me on these sessions. So Macro to Micro Power Hour, that's my guest captain interview series. I also have my trading insights, which I will pop up here. They're worth a look. And I will be presenting this week here and for David and Anka in this fabulous event. I've done stock charts. They asked me to do a year ahead, which was fabulous. Oh my gosh, I was very impressed that I was invited, honestly, because it was some big names, and I'm not. But Women in Trading and Finance has its own playlist, and then my risk indicators, which are obviously launching globally on on March 15th. So I've sent you a link for the indicators. You've got my LaDuc channel station. I have a Twitter handle as well, and definitely hope that you give me a follow if you haven't already. And then I have a little special, which is my marketing manager thought this would be a great idea because it's International Women's Month, day, however you want to put it. And this is going to be for anyone. And hopefully I'll get some more women in my trading room, but I'm not going to, discriminate. 30% off first month's new subscription at LaDucTrading.com. So go to the pricing page and you will see a monthly sign up link. And on that sign up link, you just have to put in this International Women's Day 2021 code, and you will get 30% off your first month. And I don't think we've ever done that. Seriously. So this is an honor if you join me. And I hope that the more you learn, the more you get. And I thank very much Anka and David for coordinating this women's trading event because I support it and I hope for many more to come into the space.